strawberries.
A bond is a debt investment in which an investor loans money to an entity that borrows the fund for a defined period of time at a fixed interest rate. A stock is a type of security that gives the holder partial ownership of the corporation and represents the total assets of the company the holder owns. An investment is when someone makes a financial decision to commit to a business or other economic opportunity expecting benefits to come to them in the future.
Hey man,
Oh, hey man.
can I ask you a question?
Yeah, sure.
What kind of people are affected by stocks?
Oh, younger people are affected by stocks in a trading sense more than older generations. This is because younger people can take more risks than older people because they have more time to gain their money back if it is lost.
Hey man, can I ask you a question?
Yeah, sure.
How does the government regulate the stock market?
Well, the government created the Securities and Exchange Commission to assist in overseeing the stock market, to maintain a stable stock exchange, to protect investors, and to facilitate capital formation.
Thanks man.
Yeah.
I was getting a little burnt.
Hey man, I think I know what I'm doing.
Hey man, can I ask you a question?
Sure, man.
What are the advantages of stocks?
Well, stocks usually have potential for larger returns than bonds, and some stocks pay dividends, which can help support investors after a drop in share price occurs.
Thanks man. Hey man, can I ask you a question?
Yeah, sure.
What are the advantages of bonds?
Well, bonds tend to rise and fall less radically than stocks, which helps stabilize bond pricing, and also have the ability to be purchased and sold pretty quickly.
That's good. Pretty good man.
Thanks, man.
Keep on rocking me, baby. Keep on rocking me, baby.
Hey man.
Oh, hey, man.
So can I ask you a question?
Yeah, sure.
What are the disadvantages of bonds?
Well, you see, bond prices fall when interest rates go up, which can have a negative effect on, long-term bonds, and bonds have to be held for a certain period of time before they can be cashed in. So,
Thanks man.
yeah.
Hey man, can I ask you a question?
Yeah, sure.
How does the Securities and Exchange Commission protect their investors?
Well, they monitor and investigate situations they believe could have fraudery involved.
Hey, let me get that for you.
Thanks, man.
Yeah, man. Time to go to bed after a long day of interviewing.